I'm going to talk about a tax strategy that you can use as a bridal shop owner if you are filing your taxes on a cash basis. You can't use this if you're filing on an accrual basis. And the reason that you can't use it when you're filing on an accrual basis, I just want to get this out of the way, is that if you're filing on an accrual basis, you're recognizing revenue and cost of goods when you deliver your goods to the customer, and if you're in BridalVision, when you complete the sale in BridalVision. And what that means is that if you're filing your taxes on an accrual basis and your reporting's on an accrual basis, you actually don't have control over when your expenses are reported. However, if you're filing on a cash basis, what this tactic does is it allows you to control when you are paying if you pay your designers in Q4, you can actually recognize those costs in Q4. What that means is that you can actually reduce your costs in Q4 and reduce your taxable income. So what do you want to do in Q4 in order to reduce your tax burden? You want to first take a look at your P&L. Take a look at the net profit in Q4 and say, does my net profit, my taxable income, is that about what I want to be paying in taxes this year, or is it really high? So if your taxable income is 50,000, 100,000, or sorry, your net profit, 50,000, 100,000, that's going to affect your taxable income. And you're looking to reduce that, or higher, and you're looking to reduce that, that's where you can start to consider this. If you are closer to zero or have a net operating loss for your net profit, you don't want to be paying your designers in advance or paying vendors in advance, because you don't want to increase a net operating loss in the current year. But if you do have a high taxable income, this is definitely something that you should consider. So step one is take a look at your P&L in Q4 at your net profit. And if you want to reduce that taxable income, then that's step one. Then you can start thinking about, do I have cash on hand in order to pay some designers ahead of time? Now, if you want to get into some more advanced analytics here, this is where you can start to think about your cost of goods as a percentage of revenue. And are your cost of goods in the current year, what you're paying for the cost of goods in the current year, how does that compare to what you would be paying for or what you would be reporting for your cost of goods as compared to if you're reporting on an accrual basis? So I'm just going to give you a quick, easy way to think about this is you can think of your cost of goods essentially as a reverse of your profit margin. So let's say you go into your BridalVision reporting and your profit margin is at 65%. The inverse of that would be 35%. So if you were reporting your cost of goods, it would be around 35% on your P&L. So if you look at your cost of goods on your P&L, and it is at 25% instead of 35%, what that means is that you are paying less out, or you paid out less this year in cost of goods than you probably should have. So those cost of goods, if we're just talking about customer orders here, that those either shifted, you paid them last year, or maybe they shifted to the next year. Probably they shifted to the next year because you're waiting for those orders to come in. And so that is also something to consider if it's in conjunction with a high net profit on your P&L. That's definitely something to consider in terms of moving some of those vendor payments, those designer payments, into Q4 of the current year. So I hope that was helpful. If you have comments or questions, definitely comment below and I will respond to those. If you want to talk to us about getting help with getting some clarity in those financials, book a discovery call with me. There's some information in that in the comments. If you liked this, if you felt it was helpful, definitely subscribe. I'm Ingrid Heilke with Bridal Vision Financial, and I will see you soon.